All right, welcome traders. Yeah, every now and again, right? So this time I'm using a different mic, Nick, um, and I've got two screens, so getting slowly towards a decent step up. So turn that off. So day two of the big rally in the pound. How is it playing out? Well, as we talked about in the room a few times last week, and potentially if you were in the room this week, 148 is a big target. 150 is actually 148 to 150 is the target that the remain camp bull traders were expecting the market to pop to if they did get the remain vote while the market was at 142. Now, as the market's rolled up, as it became more and more likely that remain will win, we've actually got ourselves in a very dangerous situation here, being too long, too quickly into an event which has still a significant risk of coming out a leave. Now, the size of the move is increasing to the downside, and the size of the move to the top side is definitely also increasing as well. Decreasing. So what that means is that instead of being symmetrical risk, where it's just going to be binary one or the other, the chances of huge asymmetric risk to the downside. You shouldn't be hearing any delay. Sorry, guys, just checking with the boys. So the chances of a huge move to the downside is increasing as we move up, and the chances and the risks and reward for being long into a Thursday is becoming a lot less. I'll just make sure all the tube's closed. Okay, we worked it out. Yeah, so the asymmetric risk that we're talking about. I can bring up this. Excellent. Two screens is a lot easier than one. So the asymmetric risk we're talking about is potentially the move to say 150 on the remain. Probably, given where we are, would go 151, 152. And on the downside, though, they're talking about straight down to say 138, so the previous low. Probably breaking that, given that it's going to have momentum and no one wants to catch that knife if it looks like it stays out. You expect 135 to be tested on the Friday. Okay, so that's huge in terms of risk reward here. So it's definitely, the higher we get, the more dangerous it is for you to remain going long. And the chances of some whip out going into the announcement as well is definitely becoming riskier. And this is the type of event that you can't use limit orders. So you can't have limit order say here at 143 or 144 just in case there's a rumor out and you expect the actual state vote will win. The exit poll rumor say that sort of thing will get you in huge trouble because where do you put your stop? In that scenario, if it's not a rumor and it becomes reality, you can get completely wiped out because the downside could just continue to move lower. They may even not even may disable trading. It could be pockets, and they may not even honor your stops. So it's using limit orders is not the idea. Remaining long into the announcement is extremely dangerous. It's there's just no risk reward there. It's just the potential for, especially if you're a broker with 20 to 30 to 1 risk leverage at the moment, the chances of the market moving too quickly against you to control your risk, I think, is becoming increasingly possible. That being said, is there money to be made on Friday? I think so. On Friday, when the market settled down, there's probably going to be a lot of two-way action. Yeah, a lot of profit-taking swings, and then a lot of impulsive next level, next candle moves. All right. Now, what I mean by that is, say it goes to 142, 152.30, and then it pulls all the way back to 150. That sort of price action you may want to look to buy on the Friday. What we saw in the Scottish referendum, though, was a huge reversal. Yeah, and some very extreme movement to the downside. So don't count that out either. I mean, the market's going to be heavy long, right? And the retail client's going to be heavy into any dip. So Friday, the volatility will definitely be a lot less. But to assume that's just going to go straight up is dangerous here. But that being said, any sort of big move down afterwards is probably a good risk reward. Not against the... You don't want to be playing this, I think, against the US dollar, though. I think the euro pound shorts will be the way to play this. And we'll be targeting 70 on any sort of stay vote. Alright, so we've still got a significant move to the downside, over 500 pips. Market's probably only going to be down to 74, maybe 73. So any sort of pop up there. And that just takes out the US dollar component for the rest of the year. And that's going to make you sleep well at night. Yeah, and allow you to trade the NFPs. So that's going to be my preferred way. The alternate way to that is long pound Swiss. Pound yen does take into account the dollar yen. Now dollar yen is starting to show signs of basing. What we saw today was very good if you're bottom picker, which I do tend to be in this particular pair. So dollar yen, I've been waiting for a while for some price action, which suggests that the market has found some sort of support. Now what we got today is, one of the not just that double bottom testing around 103.60, but we got the government minister, finance minister ASO, coming out saying, the bar for FX intervention is quite high, and the market didn't go down on that. The actual market went up. So that's showing you that we're no longer, it's just bears in control mode. Yeah, I mean, we are under 105, and that's going to be a big level for us to get back above. There is some concern the US dollar is too weak, okay? But what we talked about yesterday is that the pound yen and the euro yen buying could be enough to flip the text on the dollar yen. And that would be a huge positive for the euro yen and pound yen, because all of a sudden you got the pound rallying, you got the euro rallying, and then you have the pound yen, the dollar yen rallying. So you're going to have euro yen, pound yen doing those double moves, which are those 200-300 pip moves a day, and that could go on for a couple of months. So realistically, you can get the pound back towards 170, 180 quite easily, and the euro yen back towards 130, 135. 135 I think is a suitable target for year end, if the euros breaks that 116 level, as it becomes more apparent that they say the Fed's not going to raise rates. Yellen speaking tonight on this particular note as well. So what the market's reaction in dollar yen, what we're looking for here is, we're not crazy, right? We know that dollar yen's weak, but what we're looking for here is US dollar weakness, yet no dollar yen selling. Right, signs of fatigue and signs that the market's no longer wanting to be selling down here. Once we get to start to see that sort of price action, backed up on what we saw today, I think we can get more aggressive on the longs. This is just a potential idea at the moment. And I think that once we get the result from the Brexit, assuming it's a stay, you've got significant rallies to come on these two pairs, pound yen and dollar yen. Aussie yen's another pair which I didn't talk about yesterday, but it is a pair on my radar. Now, it did break down previous support, okay, but the reversal's been pretty sharp. And if you like the way that the Aussie dollar is setting itself up, because of Aussie was one of the most beaten down currencies in the past, say 2 to 3 months and weeks, ever since we reversed at that 78 level. Because the Aussie's been beaten down on the RBA cutting rates this year, and the US also raising rates, because the US has actually look to move towards a more neutral setting, what we're seeing here is that the Aussie's underperformed and the market's still short. So the flip from a short market to a long market does give more potential here. I mean, the downside of that is that, you know, maybe the Aussie's weaker and there's more chance of it turning bearish, given RBA trying to talk it down or more weak inflation numbers. But that's something else to worry about. That's July 27th. All right, so a break back above that previous high really opens the door to all the way up to 78. Now, the difference between that and, say, the Kiwi is that the Kiwi's already broken the previous highs. Alright, so the Kiwi's in its own little zone moving up, but it's got more significant resistance closer than the Aussie does. So if you like Aussie Kiwi long, yeah, if you like dollar yen long, Aussie yen is a nice little pair. If you like the euro long on the change in the Fed outlook, yeah, you should really like euro yen, because there is a chance, and I think the downside for the dollar yen is a bit more capped here. There is a chance that you're going to get a lot bigger moves here out of the yen crosses. All right, so let's just keep that an eye on what we're going to play, and obviously we're going to be talking about this as the market develops. This is contingent upon US stocks breaking to fresh highs and oil remaining stable. Yeah. All right, so that's going to be the way we're going to approach the market. We're going to keep an eye on the stocks. Stocks looking rocking here. Dow Jones. Let me bring up the S&P just so we can check it. So breaking the 2120 would really signal that this is going to go a lot higher. Probably going to go towards 23, 22 at least. That sort of move, I can't see Aussie yen not doing well. I can't see dollar yen not doing well. All right. So how do we play the Brexit? We play the Brexit via the euro pound selling on rallies, any sort of bounces. And how do we play the longer term? We're looking to the yen crosses. If stocks do well and dollar yen does well. Obviously, if oil's outperforming, we can chuck a little extra one into this. We can chuck the CAD into this. Alright, but the CAD, because I'm an Australian-based dealer, FX dealer, like I don't get too much flow with the CAD. And so it's much more North American currency, and I'm just more comfortable with the Australian dollar. But they'll be very similar. But there is potential there for the Canadian dollar to outperform. You know, breaking sub 125. I don't know. I mean, the Canadian dollars move so quickly, so fast. I just don't like it anyway. Too many people are short. That's the way I view it. Very tactical in terms of the market moves. Yeah, that sort of rant needs a drink. Yeah, boys, if you have any questions, just type one in there. We want this to be pretty interactive, yeah? Sounds coming through well, boys? You can hear everything? Yeah, look, this MBN really changed a lot. So someone was talking about the German data coming out. I haven't actually checked it. I was walking home from work. So decent pound data too. Yeah, actually that's pretty solid sentiment data. Let's see exactly why it went up. They actually tell you if you go into the data sometimes, especially sentiment data, it'll tell you what the main boost is from. It's not like this is like a government sanctioned piece of data. This is from an institute, right? And then when they release the report with their numbers, they usually give some extra information about what's going on. The improvement of the economic sentiment indicates that financial market experts have confidence in the resilience of the German economy. Apart from weak global economic dynamics, it is mainly the EU referendum in Great Britain which causes uncertainty. So yeah, look, it's relatively upbeat, but it's also starting to show a little bit of trending high too. So this doesn't go against the long euro thesis. Yeah, I think the market likes to. I mean, it can trend, but it can range trade, but it also likes to trend. It likes an idea about it, and the weak US dollar is a pretty solid idea that the euro can build upon. But let's have a look at price action. And it surprises me every time the euro rallies that they get smacked down relatively easily. It's a pretty solid resistance towards 114. Yeah. Now this sort of breakthrough of this zone, I think would really signal that we're going higher, and I don't think we can expect some sort of miracle reversal like we've got the last few times. Um, this is some sort of textbook pullback, yeah, in the euro. I mean, I don't even think we've broken the channel. I mean, it's not perfect. On MT4, it's hard to draw this type of stuff. But generally, right, there's channeling upwards. And a break above this would really target the top side. Every time you target this top side, you can break out more significantly. And once a trend begins, it can easily go 1,000 points. That's especially from these levels. We're not at 140 anymore. Right? We're just going up from 115. So yeah, but that's not my problem. That's Viper's problem. Just joking, man. I hope the market does fall somehow. It's just looking very solid at the moment. Um, they're just some of the QE programs is going to continue to make sentiment strong in the eurozone. And imagine after this Brexit vote they stay and the markets are already bullish, right? Because being dragged higher by the pound. Then we have another weak NFP number. Now you can imagine now how damaging that will be to the US dollar complex, right? The whole spectrum of US dollar pairs, which have been relatively contained. Yeah, no one's gone too crazy. Maybe dollar yen's overshot a little bit, but no one's gone too crazy against it. New Zealand dollar's going to be crazy, but generally the big boys are still within their broader ranges. So the euro pound, if they want to bust out, that's how it would happen. I mean, the pound's going to be on the war footing anyway if it's a remain. So it'll be pushing 155, say, before that data comes out. and that data comes out, we're testing 160. Subjectivity, interesting. Ahal, interesting. Um, yeah, I think there's a lot of subjectivity in how I view the market, but I'm pretty sure I'm pretty close to the reality, if there is such a thing, of the prime movers of what's going on. So my approach is what you call intermarket um, analysis. Okay, and I'm not trying to sound cocky or anything. I'm just trying to say uh, there's correlations that you can track between bonds, stocks, um, and if you watch the reaction of bonds, stocks, and FX to certain news stories, you can learn generally what's going on, and you can learn where the money's flowing and why it's flowing there. It's either a investment for stocks, and you can see that with the outperformance of, say, European stocks. Um, you you can also see it in terms of outperformance of bond market as well, just where the money's flowing, and there is reality behind the subjectivity. I don't just make this stuff up. But it may sound like that, right? But yeah, I mean, I don't know what you mean by subjectivity fully. Are you talking about just being straight technical? Because that is, yeah, I mean, you want to use technicals for your entries and exits all the time. The market does patterns, and it continues to use those patterns, and probably those patterns are based upon some form of psychological pattern which repeats in humans. From fear to the way you get a bubble, right? It's just repeats and repeats. The way you get fear and the market crashing repeats and repeats. But yeah, I mean, it is subjective. But if you showed it to another analyst, they're not going to say that he's just making that stuff up. The dollar yen stuff I'm making up. Dollar yen, I mean, that's the contrarian view for sure. Not many people saw it going down. I suppose a lot of people can see scenarios where it goes up. I just think it's easier for it to rally here than to go down. But if you've known me for 5 years, you know I'm a dollar yen bull. Uh, yeah, Nick. I don't know. I've got a lot of my clients long Aussie Kiwi. I see it basing too and starting to grind higher. Aussie dollar. If we break 75, it's looking dangerous. It's not much you can stop it here. You the best you can hope for here is to probably see a false break and a big reversal candle. But I don't know where that's going to come from. I don't know what would instigate that reversal here. It's not going to be US dollar strength. It have to be Brexit risk and risk off. This whole selling in this scenario here, oh no, the false break would give more potential for downside way. But this selling here came from stocks down. Uh, Now the stocks are going up. You can see where the market wants to go if there is a Brexit. Not no Brexit. The market wants to go high. The market was on the rampage here. This is the RBA staying put, and the NFP, those two legs. Okay. So RBA going neutral, and the NFP really gets a big reversal. So the market was on the rampage up here, got caught a little long too quick, and then the stocks fell. Oil fell, or had that false break above 50, and we pulled back down. But that reversal in the last couple of days with the pound suggests that we're going a lot higher. But anything can happen. And when we say suggest going higher, I may talk like with conviction about which way the market's going, but that it's never more than 70-30. You know, realistically, right? Stocks roll over here. You can just get a double top here. The market start to roll down, start to ranging. It's nice levels to be selling, of course, but it's just I don't like the direction it's feeling. I don't like the the sort of backdrop of the story. Like I said, it's got support from Aussie Kiwi buying as well, potentially, and Aussie yen buying potentially. So there's a lot of sources for Aussie to get strong here, and just needs the risk to be out of the way. You want to fib on the Aussie there, way? Let us change the color. Sorry, guys. What? I don't know if it's following fibs too much on that one. Sometimes you bring up that stuff and it does look pretty nice, but yeah, it doesn't look too convincing there. Are you talking inside that? Are you talking like in the last previous drop? Even then, way, I mean, it's just there's not much there. Sometimes fibs are good, it just doesn't seem like it's lining up. You literally see it bounce off the bottom one a few times, right? Like off the 50, off the 38 and stuff, but yeah, it doesn't look like it's not really technically driven, this movement anyway. This is all change in sentiment towards the Aussie. Yeah, so yeah, I don't think. Look, Kiwi's got chance to reverse more than the Aussie because Kiwi does its own thing a lot of the time, and it's been, the market's now heavy long. But if you remember Day Fox, right, it can just keep on going, just keep going. 74, 75. Yeah, yeah, Jenny, I think you're right, man. We should actually get Phil in here and have a chat with him. He probably is of a view it should have no reason being up here in the first place, right? I mean, he's probably disappointed by the RBNZ and RBA being so neutral in the announcements, knowing Phil, because I've talked to Phil a fair bit about the market in the past. He would have a reasoning behind his trades for sure. I just it's not the same as mine. I can't see the reason. Yeah, I don't know. So many times been killed trying to sell the Kiwi. I just don't do it too much anymore. If I could just learn to buy the Kiwi, jeez, we'd be millionaires. Me myself, yeah. Look, trading. I did some long euro yens in the Asian session. Like in the if you look at the candle below, in the trade ideas below. We got that long Euro Kiwi quite low actually, so it's that's still coming up quite nicely. Also got a little bit of dollar yen, but dollar yen's rolling over here. But that's a good pair to be watching. I mean, if I had to trade right now, it'd probably be given what's happened here, it'd probably be buying dollar yen. There is yen coming up. You know, I said I want to be patient on dollar yen, right? I want to see it rally when it should be going down in US dollar weakness. So tonight, if Yellen's dovish and the dollar yen holds or actually goes up towards 105, you know, that'd be a really good sign that we're changing tone. So jumping across to say, well, there's nothing clean at the moment. Euro yen and Aussie yen. These are just not nice levels right here. But you know, there's nothing wrong with just hopping on and going with the market as it was trying to rally. So yeah, Euro yen and pound yen. It's got too much headline risk for me right now. So any time I'm asleep, you could wake up, be stopped out. So check on the DAX. The world where the Aussie falls today starts out like this, Nick. Let's have a look at oil. Yeah, it could have looked worse as well. I mean, it's not like crushing 50, yeah. It's holding off a little bit. See the inside here, what's going down. Yeah, so what you need here is oil and stocks to start falling. You'd want some negative news out of UK. You want someone to come out supporting the Leave campaign. You want a new poll to come out. You need some negative news, or you need something here. At the moment, the market's just the tide is pushing Aussie higher. What happened with Magician? He's very upset with you. Is he actually wrote you something? I just had enough of his bullshit. I doubt in 30 days he's going to be happy as well. He's yeah. Look, I don't drink too much price action, and when I'm trading, just a little bit. You know, I just want the room to get to that level where everyone's respectful and looking out for each other. You know, just raise it up a little bit. Yeah, and it's nearly 8 p.m. over here, Pat. I've been working all day, mate. Give me a break, eh? Give me a break. Been dealing with angry clients. Too many people wanting advice. But yeah, if there's any particular pair you want me to have a look at, I can definitely have a look at now. Yeah, look, I can't have coffee, right? And I'll be up all night, and so I actually want to start going to the gym. So I need to start finding an hour or two to fit gym in. Potentially, like straight after this stream, go to the gym, come back, stream again the US Open. But probably won't. Need more energy. Need to get to gym to get more energy. It's a vicious cycle. Need more energy to get to the gym. Need to go to the gym to get more energy. Is what I meant. So what we did today earlier though, we did pick up a nice little DAX buy early. If you're in the room, we're talking about some rumours going around about Brussels terrorist attack. And so that caused this. I mean, the market was already a little bit skittish anyway, but then where the market was falling into that, and so we said we're talking about buying the dip. And then so we got out, basically back up here, got in down here, back up out there. But this sort of price action is surprising. I thought we would be testing 10,000. We have come a long way. It's really air pocket though. If the market was to such a dodgy looking chart. This is a problem with trading with a broker that's not 24 hours. Cash market, like IG or CMC markets, you get that future pop, that future gaps. Look at the gaps that are going over here. It's just nightmare for risk management. Because no broker's going to honor those unless you're trading with a broker which guarantees stop. And if you're trading with a broker that guarantees stop, like the broker I work with, then they charge bigger spreads, so it's you literally have to be trading in a way which abuses guaranteed stops, and then you'll be kicked off the server anyway. So what can you do? It's just part of the trading. Or you can trade with IG where you have 24-hour markets, but IG are a bit dodgy too when it comes to those moves during the day. And you've got to pay large spreads during the day. So, and huge rollover fees, which are the costs for holding those trades. Because it's not a futures contract, they can charge you interest daily, and by God, do they charge you some interest. What do you mean do I trade technicals at all? Are they the IG's the biggest market maker in the world, Nick? They're huge. They make the cash market. They're the ones who set where the market's going to open up or down. They predict it. Do I trade technicals at all? Ask price action trader. I got some moving averages on my chart, don't I? Look, some fibs, some trend lines, some Bollinger Bands every now and again, some moving averages. And then literally I just go with where the market's going most of the time. Or react quickly to the news before it's fully priced in. So yeah, that's where my edge is in terms of that. But I would love to incorporate some technicals, more technicals into the trading, because I mean what is it all about? It's all about getting the confidence to enter a trade. Yeah, I mean, once you've been trading for a while, you need reasons to enter a trade, and technicals can really give you some nice new reasons to enter a trade, say midstream. And at the moment, I don't have many. I'm fairly bad at entering a trade mid-trend, and that's something I need to learn to do, because a lot of the markets is just trending, right? You want to get out of a 1,000 pip move, you should be able to get 500 pips of that. For me, I'm only good at getting the reversals and the the extensions and the breakouts, and it's just there's a fair bit that's missing. Um, I wait for too good a levels in many regards, and there's a lot of free market. Free. Well, no, it's not free pips, but if you're so confident that the market's going to go up, and you're waiting to sell, why are you not buying in that time? And a lot of time you can watch it go up, and you're just like, I know it's going that way, but you just don't. You're not involved in it because it's not good levels. It's not good trading, and it's. I mean, look, it stops you getting into trouble, but I do believe there's many ways to incorporate technicals into your trading. Yeah, Nick, they invent the price and they make the market, and so they will, they will take your large orders. That's that's basically how IG make their money. Because they're the ones making the market, so they're making the full spread in those situations. And I've seen some very dodgy price action in the off hours. And who are you going to complain to? You can't complain to anyone. Technicals are what the algos use becomes self-fulfilling. Well, algos are getting smarter. Algos are getting more aggressive as well. I mean, algos are trying to make money off other algos. Forget the people. They've crushed us. So the traditional technicals can no longer be just assumed to be working. Why do I trade with IG? I got a love-hate relationship with IG. I get those pro real-time charts, which I'll show you again when I'm up and running. They're just beautiful. Pro real-time charts are just beautiful. And you get them for just doing 4 trades a month. So that's fairly easy to do. And so that saves you $100 a month just having that. Money in is pretty quick. Money out is sometimes done in 2 hours to your bank account, depending on the size of the withdrawal. Okay, so you can withdraw in the afternoon, in the morning, and you can get the money in your account that afternoon. So they've got really good money market system, and because they are 24 hours, the only ones you can trade with. You want to see where the indication of where the market's going to open, where the futures are. They're gonna give you that indication. Yeah, but algos, I mean, it'd be really good to get some ex-algo creators in here to have a chat with us about it, because we just what do we know, right? We read what we read in Flash Boys, and we read what we read in Zero Hedge, and we read what we assume is going on, and we read the percentage turnover. I mean, not the algos are not just market makers, right? They're not just what the big exchanges are using to make money from high frequency trading, as well as setting the market and making the spread. There is some really big hedge funds out there using algos for everything. A lot of times it's just for entry systems. Yeah, they're very good at maximizing your price of entry. But regardless of what it is, right, they're very important to know. So I'm very interested to get a bigger, deeper, fuller understanding of the algo's impact on the spot market. But it's not like we can go to the old traders, right? And that's who my friends are. The old traders don't know about the new stuff, and the new stuff is, they're our age. So yeah, I mean, maybe Hans knows a little bit more, but maybe not. Someone with a banking background. Yeah, Potter, is that true, man? The algos are making the algos? Yeah, we're in trouble. Well, there's more spent on computer research and computer science by the banking industry than the military. So think about that. Maybe AI is going to come out of the banking industry first. Yeah, but we're not talking like hobby stuff, Nick. We're talking like the mad stuff. We're talking just out of control supercomputers. I'm talking about a team of MIT quants going crazy. Masters of the universe, wizards. No, I'm not saying hobby and the whole experience. Okay, okay, okay. Settle down. Uh, uh, but I do know that for a while now I do know for a while now that they've had real language processing, um, AI interfaces that trade the news, right? Trade the news announcement, and so they're literally reading, picking up the headlines, right? And then you got those other algos which are going through all Twitter and looking at the trends. Um, that's why you got stocks moving now in the US based upon false rumors that go through Twitter. Yeah, and that's just causing havoc in terms of risk management again. I mean, you had the flash crash, which is another little very interesting failure of the modern market, I suppose you'd put it. Yeah, but if they, yeah, it's going to be interesting. I think the regulation is going to come, and there's a guy making HFT free exchange over in the US. Hopefully that will be for Forex as well, because then it can be very clean. Yeah, but probably can't be for Forex, right? There's no centralized exchange, so how would you uh, how would you allow it to influence price? I mean, that they can still move the market on another exchange. But yeah, but that's interesting topics for sure. So the market's gone a little bit quiet here, so it might be a good time to wrap up. Yeah, 148. Definitely be taking profit, guys, towards 148, right? Oh god, how do I? Okay, okay. Yeah, no, it was fun. Do I have a view on George Soros betting against the Brexit? He's just talking his book for sure. He'd be long for sure, and but I do think he generally wants them to stay in the EU. He comes across as a bit of a Illuminati guy. Straight face that Illuminati. So just keep an eye on the tonight. Keep an eye on oil. Keep an eye on DAX. I don't think we've got enough energy to get past the big levels today. Doesn't mean we can't do that tomorrow, but tomorrow's pretty close to Thursday, so probably not that either. So I think market's going to settle down for the next 24, 48 hours. I'm very interested in how the dollar yen develops though. I see the beginnings of the end of the downtrend. I want to buy Aussie Kiwi here, but yeah, I might just wait off on that as well. So yeah, sorry guys, there's no real trades happening right now. But definitely most of the time there will be. Alright, if there's no more questions, we'll wrap it up, and we'll be back tomorrow.